What is going on, everyone? Welcome back to the channel. I am your host and today is April 21st, 2026. Markets are giving us a really interesting mixed picture today. We have got some names getting absolutely crushed and a couple of bright spots trying to hold things together. We are going to cut through all the noise and give you a clean, technical, and fundamentals-driven breakdown of the top 5 stocks moving right now. We have got Lucid Group, Intel, Netflix, Salesforce, and JPM on deck. Let us get straight into it. Alright, let us start with the most painful name on the list today, and that is Lucid Group, ticker LCID, sitting at $6.75, down a brutal 7.5% on the session. Now folks, I want you to look at this chart and really let it sink in. 52 weeks ago, this stock was trading as high as $33.70. Today it is printing a fresh 52-week low at $6.75. That is an 80% drawdown. That is not a correction, that is a collapse. Let us look at the technicals. The RSI is sitting at 27.5. Anything under 30 is classically oversold territory, so on a pure technical basis, you might expect a short-term bounce. But here is the critical thing: oversold does not mean buy. In a stock with this kind of downward momentum and no earnings support, oversold can stay oversold for a very long time. There is no PE ratio here because the company is not profitable, and with a market cap of just $2.47 billion, it has lost the confidence of institutional investors in a big way. The 20-day moving average is at $9.06, the 50-day is at $9.70, and both are well above the current price. That tells you the stock is in a persistent downtrend. There is no near-term technical support from those moving averages above. Volume today is 32.8 million shares, right in line with the average, which tells us this is not a panic capitulation sell-off driven by unusual volume. This is just steady, relentless selling pressure. For catalysts, or lack thereof, Lucid has been struggling with production scale, cash burn, and the broader EV sector headwinds. Until we see a meaningful improvement in delivery numbers or a strategic announcement, I am not comfortable stepping in front of this freight train. My 3-month price target is $6 flat, and my rating here is sell or avoid. Confidence is high on that call, unfortunately. Support, if we can even call it that, is the current price at $6.75, and resistance on any bounce would come in around $8.50 where we have some prior consolidation. Next up, and this one is fascinating, we are talking about Intel Corporation, ticker Intel, currently trading at $65.70, down 4% today. Now before you panic about that decline, let me give you the full picture because this stock is one of the most remarkable comeback stories we have seen in the semiconductor space over the past 12 months. 1 year ago, Intel was trading at a 52-week low of $18.97. Today it is sitting at $65.70. That is a 240% run off the lows. The 52-week high is $70.33, meaning we are only about 7% off the top. So this pullback today, while 4% stings, needs to be understood in the context of that massive rally. Now here is where I need to wave a yellow flag for you technically. The RSI on Intel is 87.3. Let me repeat that: 87. Anything above 70 is considered overbought, and 87 is extremely overbought. This is one of the highest RSI readings I have seen on a megacap tech name in a while. That is a signal that the recent run may have gotten well ahead of fundamentals in the short term. The 20-day moving average is $54.48, the 50-day is $49.34, and the stock has been trading well above both for some time. Volume today is 96.5 million shares versus an average of 105 million, so volume is slightly below average on this down day. That is actually a modestly constructive sign, as heavy selling volume would be more alarming. The 6-month high was $68.50, so we have pulled back slightly from that level. The big question is whether Intel's fundamental story, new product launches, AI chip strategy, and potential manufacturing wins, can justify this valuation. With no reported PE ratio, the market is clearly pricing in a forward recovery story. I am giving Intel a hold rating here. The upside story is real, but the overbought RSI and parabolic nature of this move suggest waiting for a healthier pullback before adding new positions. 3-month price target is $68. Support sits around $58 and resistance is that 52-week high at $70.33. Moving on to Netflix, ticker Netflix, trading at $94.83, down 2.5% today. Now Netflix is actually one of the more interesting setups on our list today from a technical standpoint because it sits right at a really critical inflection point. Let us look at the price relative to its moving averages. The 20-day moving average is $98.30, the stock is currently below that, which is a mild negative. But the 50-day moving average is $92.23, which is right below the current price. That 50-day SMA is acting as support right now, and whether we hold that level over the next few sessions is going to tell us a lot about the near-term trajectory. The RSI is sitting at 53.2, that is almost perfectly neutral. Not overbought, not oversold. It is essentially a coin flip from a momentum standpoint, which means the next catalyst is going to be the determining factor here. Now context matters a lot with Netflix. The 6-month high was $124.14, so we are down about 24% from that peak. The 52-week high was $134.12. The company does have a real PE ratio of 30.69, which for a high-growth streaming platform with advertising revenue acceleration and password-sharing crackdown tailwinds, is actually not unreasonable. Volume today is 63 million shares against an average of 66.5 million, slightly below average. The sell-off is not being amplified by panic selling, which is a good sign. Netflix remains one of the strongest fundamental stories in consumer discretionary media. They have pricing power, they are growing their ad-supported tier, and international expansion continues. I am rating Netflix a buy on this dip with a 3-month price target of $108. Support is right at that 50-day moving average of 92.20, and resistance is the 20-day SMA at 98.30 and then the psychological $100 level. Now let us shift to one of the green names today, Salesforce, ticker CRM, trading at $186.27, up 2.27%. This is a name that has been through the ringer over the past several months. That 52-week high was $296, so CRM has shed about 37% from its highs. But today's price action suggests some stabilization is happening. Technically, the setup is interesting but not without risk. The 20-day moving average is $180.81, and we are trading just above it at $186.27. That is a positive sign. The stock reclaimed the 20-day, which can be an early signal of momentum shifting. However, the 50-day moving average is $187.54, which is just above the current price and acting as near-term resistance. We need to see a clean break above $187.50 to feel more confident about the near-term direction. The RSI is 51.7, again, right in neutral territory. No extremes in either direction, which gives the stock room to move either way depending on catalysts. Volume today is 14.37 million shares versus an average of 14.19 million, essentially right on par with average. This is an orderly, confirmed move on normal volume, which lends credibility to the 2% gain. Fundamentally, Salesforce is one of the premier enterprise software platforms in the world. Their AI integration with Agentforce, their autonomous AI agent platform, is a genuine differentiator in the CRM space. The PE ratio is 23.88. Which is actually quite reasonable for a company of this quality and growth profile in the enterprise software world. The 6-month low was $164.96, and we have bounced nicely off that level. I am rating CRM a buy with a 3-month price target of $210. Key support is at $175 and resistance is that 50-day moving average at $187.50 and then $200 as a major psychological level. And finally, the crown jewel of our list today, JP Chase, ticker JP Morgan, trading at $316.99, up 2.16%. JP Morgan is the largest bank in the United States by assets, and frankly, it remains one of the best-run financial institutions on the planet. CEO Jamie Dimon and his team have navigated rate cycles, credit concerns, and geopolitical uncertainty better than just about any major bank out there. Let us look at the technicals. The 20-day moving average is $299.79, and the 50-day is $298.33. The stock is trading meaningfully above both moving averages at $316.99, which reflects strong upward momentum. However, similar to Intel, the RSI here is a concern at 82.9. That is well into overbought territory and suggests the recent run, which has been substantial, may be due for a pause or minor pullback. Volume today is 10.77 million shares versus an average of 10.28 million, that is a volume ratio of 1.05, meaning slightly above average volume on an up day. That is constructive. Smart money is participating in this rally, not fading it. Let us put the move in context. The 52-week low was 231.37. We are now at 316.99, and the 52-week high is 337.25. So we are within 7% of all-time highs on the year. The 6-month high was 332.91, and we are approaching that level again. Fundamentally, JP Morgan has a PE ratio of 15.18, which is genuinely cheap for the quality and consistency of this franchise. Interest rate dynamics have stabilized and their investment banking division has been firing on all cylinders with capital markets activity picking back up. The wealth management and consumer banking segments continue to generate enormous fee income. I am rating JP Morgan a hold at these levels, not because I dislike the stock, I absolutely love this business, but because the RSI at 82.9 tells me better entry points are likely coming. The 3-month price target is $335, close to that 52-week high. Support sits around $298 at the 50-day moving average and resistance is that 52-week high at $337.25. And that is a wrap on today's top 5 stocks for April 21, 2026. Quick recap of our ratings: LCID is a sell, INTC and JPM are both holds given overbought RSI readings, and our 2 buy calls today are NFLX and CRM, both showing solid technical setups with reasonable valuations. Remember, none of this is financial advice, always do your own research and talk to a professional before putting your hard-earned money to work. If you found this valuable, smash that like button, hit subscribe, and ring that notification bell so you never miss a daily market breakdown. Drop your questions and your own stock picks in the comments below, I read every single one. See you tomorrow, and as always, trade smart.